Welcome to Simple Investing Secrets. In today's video, we're reviewing the 12 best tech dividend stocks to buy now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. There is a widespread misconception that growth and income must be traded off. Either a company can generate significant capital gains or its primary purpose is to distribute dividends. However, there are a surprisingly large number of technology companies that pay solid dividends. These dividend-paying tech stocks should perform better in the future due to the change in market winds over the past year. At the moment, investors are putting most of their money into companies that make money and have cash coming in instead of putting their money into growth companies that are riskier. As such, tech companies with strong profitability and healthy dividend policies should be a sweet spot for investors in 2023. These companies should stand out within the tech sector over the next year. Let's review our list of the 12 best dividend stocks to buy now. Number 12. Apple Incorporated, ticker, AAPL. Apple Incorporated is quickly gaining popularity as a strong dividend-paying company in the technology sector. Apple is one of those rare stocks that offer both long-term share appreciation opportunities as well as a stable dividend income. Apple Incorporated has increased its dividend consistently for the last 9 years. Apple stock recently went up about 9% after the company reported good quarterly results, which surprised skeptics who thought iPhone sales would be low. Dan Ives of investment firm Wedbush said in a note that Apple Incorporated proved to be the one bright spot in an otherwise horror show week of tech earnings. Apple Incorporated is the 9th most popular stock in the database of 895 hedge funds tracked by Insider Monkey as of the end of the second quarter. Among the major hedge funds which have been enjoying stable dividend income from the company include Warren Buffett's Berkshire Hathaway and Ken Fisher's Fisher Asset Management. Number 11. Comtech Telecommunications Corporation, ticker, CMTL. Comtech Telecommunications Corporation is a leading global technology company providing terrestrial and wireless network solutions, next-generation 911 emergency services, satellite and space communications technologies, and cloud-native capabilities to commercial and government customers around the world. Comtech is a relatively unknown tech stock that is trading at around $11 as of October 29. However, the stock's dividend yield stands at 3.68%. In September, Comtech announced a quarterly cash dividend of 10 cents per share. This was the company's 49th consecutive quarterly dividend. This makes Comtech one of the best dividend stocks for budget investors who are looking to park their cash for stable income in the coming months of financial volatility. Comtech recently won $50 million of incremental funding for its first quarter of 2023 for an existing contract to provide next-generation troposcatter systems in support of the U.S. military. Hedge funds are increasing their bets on the company. 14 out of 895 hedge funds tracked by Insider Monkey reported having stakes in Comtech as of the end of June, compared to 9 funds in the previous quarter. Number 10. Analog Devices Incorporated, ticker, ADI. Massachusetts-based Analog Devices is a semiconductor company that specializes in signal conversion, data processing and power management technologies. Analog Devices Incorporated has a dividend yield of 2.1% as of October 29. In February, the company upped its dividend by a whopping 10%. This marked the 19th increase in dividends from the company in the past 18 years. In October, Citi analyst Christopher Danley said in a note to investors that Analog Devices is expected to be one of the outperformers during the current downturn that he thinks is the worst in at least a decade. The analyst thinks the downturn is affecting every company and end market including Analog Devices, but said the company's management is honest about the effects of the downturn and is taking steps to prepare the company for the possible problems. He has a $195 price target on Analog Devices. Number 9. Cisco Systems Incorporated, ticker, CSCO. Cisco Systems is one of the most recognizable players in the technology industry. With a dividend yield of over 3%, Cisco Systems has been a reliable income stock that also has long-term growth catalysts. In August this year, the company declared a 38-cent share quarterly dividend, in line with previous expectations. In August, KGI Securities analyst Jackson Cheung upgraded Cisco Systems to outperform from neutral with a $53 price target. However, the stock has been under pressure this year amid a broader sell-off in the tech industry. On a year-to-date basis, the stock has lost 27%. As of the end of the second quarter, 63 hedge funds tracked by Insider Monkey had stakes in Cisco Systems. Number 8. Broadcom Incorporated, ticker, AVGO. Broadcom is a massive American semiconductor company. Broadcom is already a major player in its industry, with 20,000 employees and more than $32 billion in sales every year. The company aims to grow even larger as it hopes to acquire VMware Incorporated in a monumental $61 billion deal. That deal, along with the possibility of antitrust regulators blocking it, has added near-term uncertainty to the Broadcom story. Looking at the bigger picture reveals that Broadcom leads leading semiconductor categories like system on a chip and embedded processors and controllers with an enviable business. With shares currently trading at just 14 times forward earnings along with a 3.1% dividend yield, there is plenty of value here to compensate for the near-term headline risk around the pending VMware acquisition. Number 7. AT&T, ticker, ATT. With AT&T fully unwinding its media empire, the telecom giant can now focus on growing its wireless and fiber businesses. While a tough economy is putting some pressure on the company's results, it's having no trouble winning customers. AT&T added 708,000 net postpaid phone subscribers in the third quarter, along with 338,000 net fiber connections. Wireless service revenue jumped 5.6% year over year, while fiber growth pushed overall broadband revenue up 6.1%. The company expects to generate $14 billion of free cash flow in 2023, an outlook that was reduced due to customers delaying payments. That's normal customer behavior in tougher economic times, so it should be nothing to worry about. But it does temporarily reduce how much cash AT&T is bringing in. AT&T cut its dividend after it spun off Warner Media, a necessary move to bring the dividend payout down to a sustainable level following years of costly media acquisitions. The company now pays a quarterly dividend of $0.2775 per share, which works out to a forward dividend yield of about 6.1%. Based on the current share count, the dividend will eat up about $8.5 billion over the next year. AT&T's results should be more predictable now that the company has shed its media assets, although a potential recession this year could certainly sting a bit. The good news is that wireless and home internet are necessities for most people. Customers may delay upgrading their smartphones, which would reduce AT&T's equipment revenue, but churn shouldn't be a huge problem. AT&T investors shouldn't expect significant dividend hikes anytime soon. AT&T is still working on paying down a mountain of debt accumulated from its media deals, and that effort will likely take priority. But it's hard to pass up a dividend yield that tops 6%. Number 6. Texas Instruments Incorporated, ticker, TXN. Texas Instruments is the worldwide leader in analog semiconductors. This type of chip turns real-world information, such as weather conditions, into data that machines can interpret. Texas Instruments is enjoying a big growth market in smart vehicles, for example, which need multiple sensors and gauges to interpret the physical conditions around them. Analog semiconductors are also attractive since they tend to have longer product cycles, more stable sales volumes, and more limited competition than firms typically see in the rest of the semiconductor industry. Analysts expect a strong decade for the company, but there is supposed to be a downturn in 2023 due to excess inventory at present. Texas Instrument put these fears to rest with its fourth quarter earnings release, where both revenues and income comfortably topped expectations. The stock pays a 2.8% dividend. Number 5. Qualcomm Incorporated, ticker, QCOM. Qualcomm is a leading semiconductor company focused on telecom equipment. The company's business was built on patents and other intellectual property that help 3G and 4G mobile telephony work. Nowadays, Qualcomm is an integral player in the 5G mobile rollout. It has also developed its own chipsets, such as Snapdragon, which can power high-end phones and tablets. In the past year, Qualcomm stock has dropped a lot because the semiconductor industry has slowed down and some markets are taking longer to get 5G. The short-term nervousness is understandable, especially if a recession happens. However, there's little doubt that Qualcomm will generate plenty more value and innovation for its clients in the coming years. In the meantime, even with the cloudy outlook for 2023, Qualcomm stock is selling for just 11 times forward earnings and paying a 2.2% dividend. Number 4. International Business Machines Corporation, ticker, IBM. IBM was once one of the most important computer companies in the world. However, the company largely missed the shift from mainframes to personal computers, giving Microsoft Corporation the key operating system market. IBM has missed out on many other key technological innovations since then. While many investors may see IBM as a company far past its prime, the firm's situation is now better than most people appreciate. IBM's revenues bottomed out in the fiscal year 2020, and the company has now returned to top-line growth. With its investments in cloud computing and artificial intelligence starting to pay off, it seems like IBM has turned the corner. Shares also yield a generous 4.9%. Number 3. Corning Incorporated, ticker, GLW. Corning has pioneered a variety of new products and technologies in glass and ceramics. Nowadays, Corning is primarily involved in making specialty glass products for televisions, smartphones, laptops and pharmaceutical packaging materials. The company is known for its Gorilla Glass, which is a damage-resistant and crack-resistance glass made for smartphones. Corning has also become a leader in specialty solutions that go into fiber optic and 5G deployments. While Corning is a tech-facing company with innovative cutting-edge products, it is also a stable business with tons of mature products and well-developed intellectual property to reinforce its competitive position. This allows the company to pay a solid 3% dividend yield while also driving new product innovation. Shares now trade for a reasonable 16 times forward earnings. Number 2. HP Incorporated, ticker, HPQ. Like IBM, many investors probably don't think about HP much anymore. The company is long past its peak in terms of being a glamorous or trendsetting firm. While HP is hardly a hot stock nowadays, its investment merits remain solid. Tech hardware is a low-margin competitive business, to be certain. But HP sells a gargantuan amount of products each year. Revenue for fiscal year 2022 was $63 billion, despite a market capitalization of less than $30 billion. That sets up a value buying opportunity. Shares trade at less than 8 times forward earnings and offer a 3.7% dividend yield. HP investors are also in good company. Last year, Warren Buffett's company, Berkshire Hathaway Incorporated, bought about 10% of all outstanding HPQ stock. The Oracle of Omaha seemed to find HP's price to be too good to pass up. Number 1. Avnet Incorporated, ticker, AVT. Avnet is a technology distribution company. It markets and distributes a variety of products, including semiconductors, interconnects and electromechanical devices to a wide range of clients. The company also offers support systems to engineers and information technology professionals, helping them plan and implement supply chains and design products. Distributors may not be glamorous, but they can turn over massive amounts of volume. Avnet was generating about $18 billion per year in revenue prior to the pandemic, and that figure reached about $25 billion in 2022. The company earns a decent profit margin on these revenues, resulting in a PE ratio of less than 6. This supports both a solid dividend and a massive share repurchase program. The company bought back 3.6% of its outstanding stock in the last quarter alone, and it pays a 2.5% dividend. This concludes our list of the 12 best tech dividend stocks to buy now. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.